Yeah.
So now you fix the problem about.
Yeah. I fixed that.
And just when I turn it on the screen, just to ask them whether they can see clearly.
Yeah.
Yeah, just turn it.
They just do it before there. Chapter first of all, can you summary all the formula? Chapter 3.
I forward actually.
Yeah.
I want to prepare. So. I want to prepare a one sheet of topic. So can I send everything on Sunday? Because today we will cover topic 5. 5. 4 was divided.
Yeah.
Today we will do topic 5.
Yeah.
And this Saturday, full day, we will do topic 6.
Yeah.
So on Sunday, is that okay if on Sunday I will send all the formula from topic 1 to 6?
Yeah. Okay.
Is that okay?
Yeah.
I have to take some time to type and to be very nice and clear so you all can see that.
Yeah.
So I will send you everything this Sunday, but Sunday you have to remind me.
Yeah.
Okay?
Okay.
You have to tell me because I always forget.
Yeah. Okay. I'll remind you. Yeah.
Yes.
Can you explain about lesson 4 topic 3?
Question.
Because I saw in the question in the answer that you gave first.
Yes.
I saw that the red is different. Like,
No, red is not different.
oh,
Red
no.
Red is not the difference. Only the difference between the file that DCU they send me and I calculate only one difference.
So like you thought that there is the meaning of I, right?
What is I?
With research.
Is it the same as I sent you?
Question A.
Did I talk about this answer in the class? No? No? Oh, so something else. Okay. What can you say again? Which topic 2? Topic 3?
Topic 3, question 8.
Topic 3, question 8. Question 8. It's about find the total value of company equity, right? This question? This question, right?
Yes. But I saw you the answer in the word 5.
Yes. Is it something different?
Yes, there's two meaning of I, which is rate of return and rate of equity, right?
Okay.
So in this question A is rate of return.
Okay.
So when I apply
it's 20%, not 28%. Right? That's what you mean?
I have to open.
So let me show question over there. Then we can discuss this one before we start. This one, right? question?
Yes.
Okay. So, what is your question?
In question A, you use rate of business to apply in the
Okay.
formula.
So, first of all, in this question, first of all, we need to calculate growth, right? In this question, we need to calculate growth. And what is the growth? Can you calculate for me quickly?
Oh,
So formula is B
we multiply
multiplied by R E. So how much is B?
U on
How much is B? 0. How did you get 0.28?
118 times divided by 21. 1 minus BBS divided by EBS.
one minus
Did you remember your financial of course not you, but did you remember financial management ratio analysis? In ratio analysis, we study about shareholder investment ratios. We studied 3 ratios. One was EPS, second one was price earning, and what was third? Tell me. What was the third one? Tell me. Huh? No, we in our financial management, if I go to financial management topic, in financial management, we study ratio analysis. In ratio analysis, we study 4 types of ratios. And in 4 types of ratio, one ratio is shareholder investment ratio. And in shareholder investment ratio, we study 3 types of ratio. One is EPS, earning per share. Second one is price earning ratio, right? And what was the third one? If you remember in your notes. The third ratio, we study about dividend yield, or we call them dividend payout or dividend yield ratio. And what is dividend payout ratio? Dividend payout ratio formula is DPS divided by EPS. So, and what is your D? D means D means retention. D means retention, right?
Yeah.
Yes? B means retention. And retention equals to 1 minus dividend payout ratio. Yes or no? You agree with me? Huh?
I saw the dividend share.
Dividend per share, not dividend yield. Let me check the notes for financial management. Check the notes and then I'll explain. Formula is DPS divided by. Check. Yes, look. It's inverse. There is a reason for inverse. Look. This is your financial management class. EPS, price earning, dividend yield ratio. this is your notes that I taught you in your batch. So it's an inverse ratio that I use it, but it's supposed to be DPS divided by EPS. It's supposed to be inverse. So anyway, if you do not remember, don't worry, because you also don't know that you haven't done your financial management. But are you okay with this?
Yes.
You okay with this, right?
Yeah.
Now, you have to calculate your dividend payout ratio. Once you calculate your dividend payout ratio, then you will 1 minus dividend payout ratio. And what is your dividend payout ratio? DPS divided by EPS. Your DPS is 0.18 and EPS is, how much is EPS? 0.25. Min, they can see that? Is it clear for them? So EPS divided by EPS. So we got dividend payout ratio. So how much is dividend payout ratio now? What is dividend payout ratio now?
Zero point seven two.
0.72.
Yes.
So yes, 0.72 is your DPS. So what is your retention now? Retention would be
0.28.
0.28. Retention, we got retention, and then we got RE. How much is RE?
20.
Return, how much is return? That's return that will increase your investment.
20%.
Right? So now we got G. You got the G?
Yes.
Right. Okay. Now come back to your question. What was your question?
Question is when you apply the formula PO,
Formula for?
PO,
Okay.
that is you use the rate of return instead of rate of equity.
You mean divide when you
Divide RE minus G. You use the rate of return instead of rate of equity.
yes, you, because this is different. Always remember, this is the rate that will grow your investment. Because what is the meaning of return on assets? Return on asset means the use of assets to maximize your profitability. When you use your assets, your profitability increase, and that profitability highlight the growth. So the idea is that your formula is P0 equals to D01 plus G divided by RE minus G. So now your question is this RE, which percentage, right? That is your question. That is your question. So anybody give me answer. What should be this RE here? Because we have two types of returns. The return is this. The return is this current return on assets, and This is equity.
Current market.
Market rate of return. Market return is 12%. This is in this situation, it's very clear. Rate of return means how much money you are earning when you use your assets. What is the contribution of assets to maximize your earning or making profit? So means asset is a tool to tell us how we are using our money. So means this asset is a tool to make money. So it's a growth because asset is the indicator about your investment. I buy assets to make money. Means asset will help me to make money. Asset will help me to grow money. So this ratio help me to grow my investment. Once I know this ratio, this percentage help me to grow my investment, obviously other percentage is the I have to pay. So means my RE, this RE would be 12%. This RE would be 12%. Growth means you read the question and you find the indication that maximizing your money, increasing your money, like as the one time we practice another question. I don't know where. Last time we practiced some question, probably here. Yeah, probably this question. When we practice this question was quite straightforward. The return generated on investment, return on investment, return on assets. This is the indication of your money growth. Money growth. Return on investment or reinvestment, return on assets. Return on maybe equity, If you say return, means it's talking about your growth. If this one is growth, obviously any other information about your equity or percentage would be your RE, second RE. So, is that okay?
Yes.
All right. So, remember that. So, when you calculate, especially G, you have to understand what is retention. So, dividend payout ratio. Sometimes your question directly say you what is the meaning of dividend payout. Sometimes question doesn't say that how much is dividend payout. Dividend payout is different, probably different than dividend per share. Dividend payout means when you are, let me explain it. DPS and dividend payout. They are different. Dividend per share means how much dividend you earn. How much dividend you receive per share. And what is dividend payout? Dividend payout means how much you receive and how much you earn. Means overall, how many percent, you know what does it mean? It means how many percent company is paying you. So 1 minus this, how many percent company not paying you, which is retention. So this is the idea. So you cannot 1 minus DPS. No. 1 minus DPS is something else that doesn't make any sense. Because your DPS answer, how we measure DPS? DPS is a dollar per share. Dividend payout, not dollar per share. Dividend payout comes in proportion. So if you minus 1 minus DPS means you are earning $7 per share, and if you 1 minus $6 per share, does it make any sense? No, it doesn't make any sense at all. The reason to minus 1 is to get this is what company is paying, and this means what company is not paying. Company is retention of the company. All right. So remember that. Do not get confused between these two. They are completely different. They have a completely different meaning. So that's why when I was teaching you ratio analysis in your financial management class, when I was teaching you ratio analysis in your management class, then you can see when I didn't explain about DPS. DPS, look, what we receive, what we earn, the difference, right? So when I talk about earning per share, I write here dollar per share. Your EPS is a dollar per share. If EPS is dollar per share, of course, DPS also dollar per share. So 1 minus DPS is again dollar per share, but payout is not a dollar per share. Payout is a proportion, because if retention is a proportion, 1 minus retention is dividend, payout is a proportion, right? So yeah, so you have to be extra careful about that. In fact, it's a very obvious thing, but students normally make mistake. I don't know why. Remember that. So is that clear? So remember, right? But again, it's really pretty for financial management student, because by the time you finish financial management, at the same time you are finishing corporate finance strategy as well. So the last lecture of financial management, I think the same week that we study corporate finance. So I don't know. It's really pretty, but remember, next time you do not study any course before you reach to the another level of the course. It's very important to finish all the diploma courses before we go to the top. So anyway, any question, or we start next topic, which is merger and acquisition. This Saturday we have a class full day, right? Morning and afternoon. So morning we will start 8:30. Is that okay?
Yes.
You want to start 8 or you want to start 8:30?
8:30.
8:30 or 8? 7:30? Are you sure about that, Tasha? 8:30 is good, everybody?
Yes.
And if we start 8:30, and afternoon class would be 1:30. Is that okay? So 8:30 to 11:30, then we go for lunch, and then 1:30 to 4:30, and then we finish. And on this Saturday, full Saturday, morning and afternoon, we will continue only one topic. Right? So this is working capital that we studied. So that topic is quite long in terms of concept, but it's not hard. It's accounting based. It's ratio. It's a combination of ratio. So you would be okay with working capital, because most of the things that I will teach you in working capital, you already either study in your management accounting, ratio analysis, or financial accounting. So it's not really challenging for you. But next week, it's gonna be quite a tough week for you in terms of 2 topics, and that 2 topics would be the last topic, right? So that's why one topic I will spend 2 sessions, and the second topic also spend 2 sessions. So now before we start topic 5, I want to talk about your final exams and marking schemes and this and that. email. So I go back to the first slide. All right. So okay, they said that I am telling you exactly what your module leader said, right? Module leader, whoever, I don't know, course leader. So your expected date for exam is 21st of October 2024.
Really?
That's what he said. I have no idea.
Why is 3-1?
No idea.
Is that the same thing as
No, remember, it's not confirmed yet. The date is not confirmed yet, but what he said, expected date is 21st of October, and he said that the expected exam date for this course, based on the planned time schedule, is on the week commencing from 21st October, because
How about from the last day we finish this course? Is there any exam we can have the?
yeah, that's what I was thinking. I think I will not waste my teaching time for mock exam. Mock exam can be stopped because mock exam is between you and me. It has nothing to do with UK. Mock test. Mock test is just a kind of friendly exams. It will not affect your final exam grades, even though, hopefully not, but even though if you got 0 marks in mock test, it will not impact on your grades. So mock test is between you and me to know your performance. So what I was thinking that I will give you probably 1 week, 2 weeks, 1 month, take your time for the revisions and practice. Then I will ask office to arrange mock test for you. I don't want to use my teaching time for mock test because it's a waste of time. So better in that time you can do some more practice, right? So last day of the class, you can decide when do you want mock test. Do you want mock test 1 week later, 2 weeks later, 3 weeks later?
I mean that the example of the mock exam is it several topics that we can base on that we can practice more at home before the mock exam.
I have to check because unfortunately he did not send me so many mock tests. So he just shared with me very few. Now I will see. I don't know, 1 or maximum 2. I think 2 or something. I have to again check the folder. But I was looking for mock test, more and more mock tests, so I can give you multiple mock tests. If you want test, you can't do well, and then second test. But I have just only 1 or 2 mock tests. If I have 2, one I will give you for class activity, for class test, actual exam. Second one, I'll give you normal one to stay at home and practice. If I have whatever material I have, I will send you everything. Right? I will not keep anything with me. So,
làm gì không không cũng cũng là ví dụ xa giống như đúng là cũng chị nhưng mà môn này cũng xa
what they said, what he said, 21st of October is not an exam day. What he said, 21st of October is a week that starts. Exams week, exam duration, time period, whatever. So this week, your week starts, right? That week starts. So after this time, your exams would be anytime. So means, I'm just trying to explain you that you get ready for your exam by the end of September. You are ready for that. It could be first day of the week, maybe 2nd of October, 23rd of October, I have no idea. But that what he's not sure yet, the exam date, but exam date would not be before October. That's what he said, right? If he says that exams date in August or September, then you tell him that what our teacher said that exam, so you take my name. If, because I have evidence that he said that exams week will be start. He's not saying that exam date is 21st of October, but he said that week will start from 21st of October and any time exam date will be confirmed here. So, but it's not now. You know what is the reason for that? I don't know, do you know that or not? Your schedule is very tight. You study multiple topics in 1 week, but over there, they study 1 topic 1 week. So it means we start at same time, July. So July plus 12 weeks. So it would be July to August, August to September, yes. So students in UK, they're going to finish this course 1st or 2nd week of October in UK. So that's why they are giving them 1 week, 10 days break, and based on that, so based on that dates, they decided to start. Right. But why your teaching schedule is so tight? I mean, why are you teaching multiple subjects in 1 week? What is the reason? I have no idea.
But actually, for me, that's one of our advantages also. We finish the session earlier.
Yes. If you keep in touch with that. But the disadvantage is that if you get busy with other subjects, other topics, you will miss that. But yeah, it's an advantage, but you have to keep in touch and keep practicing, and you become so confident. Okay. So let's hope for the date. But anyway, you got the idea. So you have a plenty of time. So we finish everything July, so you have full August, full September, 8 weeks, very good time. So in 8 weeks, my suggestion is that you don't have to study every day, but every weekends, if you are busy with your work, you spend a lot of time on every single weekend. So you have total like 8 weekends. So 8 weekends means you have 16 days. Very nice. 16 days. And regarding your marking schemes, that what she asked, I also asked him specific marking schemes. That what he said that we do not have any kind of rubric or something that you're supposed to have like this. Yeah, rubric something. We don't have those things. Instead, it's a simply step marking. Step marking means one question like two. Remember when you have a specific question, they give you marks as well. 3 marks, 2 marks, 3 marks, 2. It's like that. So just you do that question and you understand the marks for that. But there is no any hard and fast rule for exams. Rubric normally work for assignments. It's really good for assignments, but I never seen that anybody do it for exams. They don't do it. So for mock test, when I will give you mock test, before mock test in the revision session, I will talk more about the steps to get marks. Yeah, but it's very general, marks. This question 2 marks, this question 2 marks. So now we start. So, topic 5. Topic 5 is merger and acquisition. Merger and acquisition. Now, remember, the word merger is a little bit different than acquisition, but generally these words used interchangeably. So means we use the word merger for acquisition, acquisition for merger, but I give you a quick idea. What is merger? Merger means A plus B become new company, A, B or C. For example, A is one company, B is another company. When one company merged with another company, it becomes a new company. This is called merger. Acquisition means A plus B, then only one will exist. Maybe A or B. This is called acquisition. Acquisition means acquire. So it means you're gonna control over assets, management, and so on. But in merger, both company exist. Probably their management is same or operations are same. Not major changes in operations and management, so on. But at other top level, they may have some kind of changes or collaboration for both companies, right? But generally, so in this subject, we will not take them separately. We use as a one idea, right? Acquiring. When one company is acquiring another company, that's called the acquisition. Right? So, what is merger or acquisition? Merger or acquisition means when one company acquire the another one. This is called merger, or you can call it acquisition, whatever. So in acquisition, so we have acquiring and acquire. We have two companies. If I say acquire, so we have acquiring acquiring and acquire. So if my example is A plus B and only A exists, so what does it mean? A is acquiring and B is acquired. Right? A is acquiring and B is acquired. So acquiring firms retains and acquired firms cease to exist. So means acquiring firm exists, remains same, but acquiring firm gone, removed, doesn't exist at all. All right, they have no name, nothing at all. All right, forget about acquiring firms, not exist anymore. What is the advantage of this process? This step is very legally simple process. But the disadvantage is that you have to get approval from the stockholders to do that. Company cannot do by itself. A company doesn't want that any company acquire them. Management may not be involved in such kinds of decision making that other company will acquire them. Stockholders or shareholders play a very important role. What is the merger? Now, let me give you a very good example of merger or acquisition. Have you heard about the company called Have you heard about that?
Yes.
Walt Disney?
Acquisition by Walt.
Yes. And another one is yes. They have acquisition between Walt Disney and which exist? Walt Disney. It was an acquisition. Just an example. Right. And this company exists. All right. That's the basic idea about the acquisition. There is another concept about acquisition, related to acquisition, is a consolidated. Consolidated is similar concept. Consolidated means when multiple companies, multiple means more than two companies, they merge together to create a new company. This is called consolidation. Consolidation means, let me write down, it's A plus B plus C plus D make new company E. This is called consolidation. More than two. All right. These are individual companies. They merge together. They group together. Consolidate means together. Consolidate together. Right. And they turns into a new company. This is called consolidation. Right. For consolidation, we also have very interesting example. Consolidation, interesting example is I don't know, have you heard that or not? United Airlines? Yes, kind of, but yeah, I'm just trying to give you example of the consolidation, the practical example for consolidation. You can find some other examples, but that company may not be very popular for you to not for you. So it's just an example.
But in this case, which company is the owner?
The new company. None of these companies comes exist.
Equal.
Equal, but again, when all companies are consolidated together, the main reason for consolidation is to expand the business. Or maybe these companies are not doing well. Maybe these are airlines, and those airlines not having a really good time for that. It's kind of a risky business. So they decided to come together to become a new company. So instead of running multiple airlines, because remember, if I say airlines, they have market share. They're sharing a market. For example, there are 4 airlines in a company, in a row. 4 or 10, total 10 airlines in one country. And 1, 2, 3, 4. If 10 airlines, so on an average, one airline is sharing like 20%. If these 4 companies, not 20%, but 40%. Sorry. If those companies will come together, this E company will hold 40% share in the market. They increase their 40%, where their share is like, I don't know, 10%, 10%, 10, and then 10 turns to 40. So that's another purpose of consolidation. You're having a bad time, so it's very hard for you to survive in a market, or client acquisition is getting more and more difficult for you because of the competition. So better come together, form a new company. So that's probably could be better option.
Or probably have to become.
Yes, it's become a new company with probably old operating system, but new management, shareholders, and blah, blah, blah. Or maybe all shareholders are together with new management, new operations, new operating systems, and everything. Yes, so, but they are together, coming into a one group rather than individually. So probably shareholders, but they're coming together. We will not study consolidation in this topic, but it's just for your knowledge to know what is the difference between merger. But they come in the same idea. It's the same idea, getting together, right? So we will not talk about the basic difference between merger and acquisition. It's just another term to explain the idea behind merger and acquisition. Now we move on to our main idea for this topic. Maybe another example that you already studied with me. So I will not start with the next slide. I will continue here. You already studied with me last time about types of merger. Types of merger. Remember how many types of merger we have? 3 types of merger. Horizontal. Yes, horizontal merger, vertical merger, and conglomerate. Horizontal merger means both are at the same level. Probably they are competitors. We call them horizontal merger. Any examples could be exist for this horizontal merger. I can give you a really quick example for horizontal merger is a Walt Disney. Walt Disney merged with another company. That company called I don't know, have you heard that if you watch cartoon? Pixar. Have you heard that one?
Yes.
Pixar, I think animation, right?
Yes.
Animation. Now they comes together. This could be, again, you can call it acquisition. You said, oh, teacher, this is acquisition because Pixar animation doesn't exist anymore. Yes, you can call it acquisition. It's up to you. As I said in the beginning, we are not differentiating between merger and acquisition. You can use the word sometimes merger, you can use sometimes acquisition. It's completely right. So this is the real example for horizontal merger, right? Vertical merger. Vertical merger means merge like that. Vertical merger means these two companies are not at the same level. They have different market, different customers, different product, different services, but they are not at the same level. But they have a link with each other. So the best example for horizontal merger could be Amazon. Amazon merged with the, I think it's the US market, Whole Food market. Whole Food market merged with Amazon. So it's a vertical merger. The reason for that is that you want to minimize your cost acquisitions and probably make things more easier for you. So, but they are not competitive. Remember that they are different. Another example could be like in financial management class, I give example that when any steel manufacturer will merge with another car manufacturer. Car need a steel, iron, and then they merge together. But they are not the same level of company. They are different level. Vertical merger. Now, conglomerate. Conglomerate means these two companies, they are not competitor at all. They're not in same of product, not in same of service, and they are not linked with each other as well. All right, they are not supplying things to each other because the nature of these two products are different from each other. All right, so example could be the real example for conglomerate is so I write this, so means no any kind of link. Tesla and Twitter. Now it comes under no, I don't think so. No, no, I don't think so. GE, General Electrical, right? You know GE company, electronics company. They make light bulbs and some other products. GE. You never heard? It's very famous even in my country, from US. They produce electronics bulb and things. It's one of the oldest company in the world about electric stuff. Yes, it's one of the oldest in the world. Yeah. So General Electric, we call them General Electric. You can search later. And another one is the company conglomerate with NBC. Have you heard it? NBC, they have a rainbow logo. It's news channel, about business news channel. It's like they have a rainbow like that. Something like that.
Discovery.
NBC, have you seen any kind of channel? Yes. The news channel. But that news is mostly about business news. But they have some other as well besides this one, but it started with the business news and so on. So this kind of conglomerate means GE is an electronic company, but not only electrical, but they also have multiple businesses as well. But they also conglomerate. It's just example, right? Just for you to understand. GE had a multiple conglomerate because GE initially it was an electric company. Later it's collaborated with or merged with many other companies. I don't know their name because those companies were not really famous. So the company that's very famous that I can tell you is NBC. Because I'm telling you the name, which you know that. Again, not only these merged, they have some other merged as well, but we don't know their company name. Right? So this is just very basic information about types of mergers. So mergers could be happen in multi dimensions, right? There is no any specific scope, maybe or maybe not. So if you look at the scope, yes, horizontal and vertical, they have specific scope, but conglomerate, no. One company could be merged with completely different sector, different industry, right? So we move on now. Now, how acquisition or merger take place? So let's talk about various forms of merger, takeover, whatever. Various forms of M&A. Various forms of M&A. So initially we have three forms. Initially we have three forms. One is I think you know that. Going private. Second one is acquisition. Third one is a proxy context. Going private means, remember public companies? Remember public companies? Public companies controlled by government, right? When public company decided to go private, this is called going private. When public company decided to become a private company. And how public company can become a private company? By selling their shares in a general public or through the private placements. Specific private group of people, they choose them to become their shareholders. More than 50%. Because public company means 51% holding they have, control they have. More than 51% means you have. But when company, I'm not saying that in public company 100% control would be by private people. Maybe public company decided to lose control by 51%, but 49 is they hold. But still they have less control because 59 hold by private people, 49 hold by public is become private. Right? So means going private means public companies turns into private company. Private company.
Do they still the public fund or they totally switch into the private?
It's mostly by private. They switch to the private company. No more major public involvement with that because they lose their control. 49 means you know what control. Someone is control. Maybe Vina Milk or Vina Group, I don't know. I'm not sure about that. Yes, if you know that. So this is the idea behind going private. It's typically owned by a smaller group of people rather than public. So it's owned by private people. So private people. Private people take a control on that company. Maybe it could be a single company. Maybe public company decided to become a private, so private company will buy them. It's possible, right? It's not only by selling shares and so on. One another private company can acquire it if government company is willing to do that, right? That's depends what they want, but this could be possible. Next one is proxy contest. We call it proxy fight. It's very interesting. I will explain about proxy fight first, then I will move on to acquisition, because acquisition is the main part of this topic, right? So, because we will not talk about going private or proxy test anymore, except very last. Right? So, we call it, have you heard about, do you know what is the meaning of hostile? Hostile, Hostile. Have you heard hostile? Hostile, hostile. Have you heard that one? It's, I will explain. That's linked with the proxy contest. We also call it proxy fight. Proxy fight. So, proxy fight means when one group of shareholders in a company want to take a control over overall company. I repeat, when one group of company want to take a control over company, for example, remember in company, voting is very important, right? And voting based on the number of shares that you are holding. So if one group of shareholders, they come up with the idea to take a control over the company, they vote in favor of something. And if someone have a majority of votes, and then based on that vote, they take major control over the company. That exactly same procedure happened. You know how in parliament, I'm talking about democratic country because I have no idea how bills, you know bills? Bills like as act, which is about law. Bills like as any kind of act or bill. For example, we talked about last time Sarbanes-Oxley Act or so on, because of bill. How those bills are passed in parliament. These bills are passed based upon the member of parliament, we call them MPs, they vote. If the bills got the majority of votes, then that will be passed and it's become a new law, new regulations. So means it depends upon the majority. Exactly same thing happened in a company. If group of shareholders, they come up, they're not really happy with board of management and so on. So they want to control over them by force. When you control on something by force means they come together, make a meeting and take control over something. It's like a kind of war, but not literally war, but kind of war and acquiring, put their own forcefully control something. That's the meaning of proxy fight or proxy contest. It's a kind of competition in terms of proxy things. So that's why I use the word hostile. It's same like that. You enter and you just start killing and fighting, and then you control over it. That long time it used to happen with the country. Like I don't know the name of any ruler. Like Genghis Khan, Genghis Khan, the guy who Mongolian ruler. So they do exactly same approach they apply. So it's similar like that, but again without fighting people. Yeah, it's possible. It's happened, but it's not good. That we will discuss at the end. Yes, you want to give a 51%, so you come up with kind of groupism.
But at the end, it's still one company, right? It's just
it's still it would be one company, but again, in one companies there are majority of shareholder, minority of shareholder. Because company is not about company is about who has the power to run the company. It's a fight for power.
I heard about the terms in the mix. They say switch the head or changing blood. That can also be considered as a proxy.
So I think it's exactly the same thing. Exactly. But we have some defensive technique. How can we stop all these kind of things? Because this sounds bring the kind of this is not really fair. It's not a fair thing. It's not a good thing. It's not a good at all. It's not really, I think your camera is strong. It's not really inspired. It doesn't inspire anything. It's not a good thing, right? So at the end of the lecture, we talk about what are the defensive techniques in a case of toxic trade. How can you protect not to be such kind of action happen in a company? Again, company will not change. I'm talking about inside the company, power, decision, control, and so on. Company would be company, but the internal system would be different. Like as for example, what a few years back happened in Myanmar, coup by the army, but still is a Myanmar. Myanmar is not become US, it's still Myanmar, right? So it's same, company would be same, but internal system would be different, right? So we call them proxy contest or proxy fight.
South Korea movies.
Probably, yes. So it means, I repeat, group of shareholders tries to control board of directors or probably management. Right? So, and what they did, they replace board of, because again, in board of directors, who gonna be a part of board of directors? Shareholder decides, shareholder vote. So this group of people, they vote and existing board of directors out, and they will vote only their people. So their people come in a position. So it means their people support them rather than other fair decisions. See, it sounds not really good. So that's what happened in a company. It's like a fighting, and my people will work in that company. It's all about like a politics.
Yes.
It's political movies.
I heard about the employee, they joke with each other. They say when this hostile thing happen in the company, the organization can equal to the snake without a head.
It's what?
Snakes without head.
A snake without head.
It's basically very panic and everything is kind of chaotic.
It's also happening in Vietnam sometimes. I think it's happening. It's almost everywhere. I guess it's not completely one country concern. It's not really good for specific period of time. Yes.
And the next period they're going to switch any kind of key people. They contain first. They will cut off whoever report to the previous board of directors. They will take over almost the entire power.
Actually, in Vietnam, I also have seen that sometime when one company, probably president change, president or the head of the company change, all the management change. So they bring completely new people in that one. And then when that person go out, another person comes, it's change. After 4 or 5 years, it's completely different companies, doesn't stay long. So yes. So maybe because of these reasons, your public company may turns to private. I'm not saying that this thing only happen in public companies, also happen big private companies as well, big private companies. So that's very interesting. So sometimes the reasons could be genuine reason. Genuine reason means it's not always bad. Maybe the group of directors, they not really agree with management decision. When management, they start thinking only about themselves. They become selfish. Remember agency problems? When there is a very high agency problem, there is no any solution to solve that agency problem, then this hostile happen to get rid of management. So that's why they just want to remove these toxic people because they only care about themselves. Then it's happened. Another reasons could be corporate governance. Corporate governance is not very strong because as we studied in the first lecture, that corporate governance plays very important role. When corporate governance is getting weaker and weaker, the board of directors, they become so selfish because normally corporate governance, they watch over the management. We call the management oversight committee. But when they stop oversighting management because they're not more powerful in their company, then management become more powerful and they become selfish. So then shareholders, they have to apply this proxy contest approach to get rid of this management situation. Yes, so it's kind of like those things. So yes, now we move on to next one. Acquisition. This is the main one. Acquisition. Acquisition involved three things. One probably you know. So acquisition, we have merger and consolidation that I will not talk about. Merger and consolidation, that you know that. Second one is a acquisition of share. Acquisition of shares means they acquire share. Acquisition of share means when company buy another company share, they become controller of that. Another one could be a acquisition of assets. Because either you control company by buying shares or you control company by buying assets. Because if you control the asset, technically you are the controller because company use assets to make money. So asset is your resource. So when you acquire the resource means you are acquiring the company. So in case of acquisition of asset that we will discuss later, in case of acquisition of assets, shareholders, they give them share. They're not buying share, they're giving them share, and in exchange they're taking their assets. All right, so it's one of the way to control over the assets, right? But in first option, they give them money, they give them share. So in this option, these are shareholders, right? These shareholders, they give them money and company give them shares, right? And in case of acquisition, they give them shares. And in exchange of shares, they give them assets. Right? So such kinds of things probably happen, but at the end, it's the same idea, is acquiring one another. So this is the idea behind your forms of merger and acquisition. Now, any question or move on? Move on. Now we move on to another point that's not really big, but it's important. It's a very small thing, which is tax consideration. You know, in M&A, there is a acquisition happen between two countries, two companies. Sometime this acquisition happen maybe within country or outside country. If it's within country, things not as complicated as outside because of the foreign country, and different foreign country have a different rule, regulation, procedure, steps, and so on, and maybe different accounting standard, different tax system. So when it's kind of merger and acquisition occur at foreign level, at international level, things get a bit complicated. Right? So that's why, in order to deal with, because of foreign issues, things get complex. It gets complex. So in order to minimize complexity, we have some standard, accounting standards. That accounting standard provide further guidance that how acquisition could be happen if acquisition is happening at national level or international level. All right. So to minimize such complexity, we have standard. You don't have to go in very detail, but I'm just giving you very general ideas since it's part of your syllabus. So we have IFRS 3 and IFRS 3 and IFRS 10. IFRS 3, as far as I know, it's about business combination. Business combination means when one business combined with the other business. The name of this IFRS standard 3 is a business combination. And I think IFRS 10 is a consolidated financial statement. Consolidated financial statement. It means when you are a group, consolidated group, not just a single entity, then how you prepare your financial statement, how you report other companies' information in your consolidated financial statement, and what would be happen if your subsidiaries are operating in a foreign country. So maybe currency is different and so on, and how tax things would be implemented in that situation. Every information are given in this IFRS 3 and IFRS 10. All right, that's it. That's all about this tax consideration.
So IFRS have many editions.
Yes, so many standard. IFRS is a one book, and in book has so many standard, almost about everything, every single thing about business. They guide how you can do this, how you should do it when you are doing this. So whenever auditors, they're going to audit financial statement, they always give the reference. Auditor always look at the standard. What standard says, what company does. Is it match? This is one of the audit procedure auditor apply. All right, so I think we call it analytical procedure or some specific procedure. So auditor match, right? The things really goes as standard says, or company doing whatever company likes. Of course, company doesn't. So any question, or we move on? Move on?
Yeah.
All right. Now, next is why acquisition fails. Why acquisition fails? It has many reasons. There's no any specific reasons for that. There are many reasons. Because acquisition means two companies are getting closer together. So I'm talking about very few, will not spend so much time on it, but one example could be intellectual capital. Intellectual capital walks out of door. Means intellectual capital leave the company when it's not carefully handled. I think it's stopped. The battery, I don't know. So
Another reason.
intellectual capital leave the company. I will talk about what is intellectual capital. It's leave the company because it's not really handled carefully. They're not really caring about the intellectual capital. What is intellectual capital? Intellectual capital means any kinds of intangible assets, right? Tangible or probably mostly intangible assets. Let's say
It's out of the battery.
okay. No problem. So, for example, human skills or employee skills. Employees' skills. You are not giving importance to your employee skills. Right. Second one is property data, maybe other data that is really crucial for you. Any kinds of data or probably any kinds of specific formula. You're not giving importance to that. You're not giving importance to your brand awareness. Brand awareness. When company is very small, it's performing very good. But when it's acquired by the other companies, it's not really good as it was before. That probably could be a reason. You're not giving really importance to your employees, their skills, whatever contributions they have in a company growth, your data or specific formulas to make your product so unique, but you are not really caring about that formulas. I give you one very interesting fact about intellectual capital things. Coca-Cola is the best example to maintaining its intellectual capital. Coca-Cola simply selling the same kinds of product over the period of time, but very different types of approach. They're using their product very smartly. They have one specific formula. Their taste not have been changed for many years. If you if you do this thing with your product, customer get bored, right? Customer always get bored that customer are using same kinds of product for many years, but Coca-Cola is probably different in terms of that. So, but I'm just trying to explain you that whatever importance, what is the backbone of your product, you do not really give importance to that. Right? If this is the case, then your acquisition may fail. It doesn't really work well. Even though small company was doing so good, but once it's acquired with you, it's gone. You're not really aware about the importance of taking care of your brand, how important it is, maximizing the awareness among people about your brand. You're not really caring about that, right? You just probably focus more on profit maximization than other factors, rather than you just introducing your product in a unique way to the customer. You're not doing that, but you can see that Coca-Cola, they did very well. They're really aware about their brand. And every time they introducing completely different things to the different people with a different way, but with the same taste of the product. So it's about the brand awareness. So probably because of these reasons, acquisition fail. If we talk about acquisition fail, here very interesting concept comes. Acquisition fail. That interesting concept arise here is I hope you know that we call it as, have you heard it, synergy? Synergy means 1 plus 1 is
0.
11.
What?
Not 0. Normally, not literally plus, I shouldn't call it plus, I should call it 1 and 1 is 11. This is called synergy. It means one person working alone, but that person work with 2 people. They can maximize productivity multiple times, not only 2 times. Their productivity will not increase 2 times. If one person is making 10 products, 2 people may not make 10 or 20, they make more than 20, hypothetically. But this is the meaning of synergy. If 2 people, they become more powerful, rather we will not count as a 2, we count as a 20 or 200. So that's the idea of synergy. All right, it's boost yourself. Another example to explain synergy is, chemicals. In physics, we have one chemical, we have other chemical. This chemical has its importance to do something, and its chemical has an importance. But when you merge them together, it's become atom. It's become disaster. But at individual level, they're very small. But when you merge them together, it's become nuclear bombs or something very huge. That's the meaning of synergy. Means 2 companies individually, they are okay, but when you merge them together, they become so powerful. That's the concept of synergy, comes in merger and acquisition, right? So that's the purpose of acquisition, to turn your acquisition into synergy. The purpose of acquisition is not just 2 companies merge together and become a little bit big company. No, the purpose of acquisition is to win the market. That's why they are taking a risk to acquiring the other company. That's the whole objective of this acquisition. So this is the very important concept that we will focus in this topic, which is synergy. And we have a formula and calculations about minor calculation, not so complicated, very basic calculation about synergy. Right? So I hope you get the idea what is synergy means. So now let's have a look at some kinds of numbers, or probably the formula. Synergy for acquisition is what is the meaning of triangle in maths? Anybody knows? No. Sorry, can you say again?
Understand the synergy in the organization behavior.
What is that?
It's something like how you force people to finish their own tasks.
Yes, so it's same idea. Yes, same idea. It's happened with the company as well. It's a very, very, very popular in a business, finance, business combinations. Yeah, it's a very popular and important concept we have. So now, how we calculate synergy? How we calculate that? Here is a formula. You know what is the meaning of this?
Surgery.
No. Triangle. You know what is the meaning of triangle? It means in maths, triangle means change.
Yes.
Change in something, we use the triangle. Changing in maths. I don't know you study the same thing or not, but there's a universal law in maths. But anyway, change V4 value. All right. And value VAB means value of acquisition. Yes, after acquisition. Value after acquisition. And this one is individually. Individual company and together company. You minus. And if this is positive, your acquisition is successful. All right. If this is negative, then acquisition failed. This is one of the very basic criteria to measure your acquisition.
So maybe before start.
This could be happen after, or you can calculate expected valuation in advance. This could be possible. So this is a very basic formula for synergy. Positive means incremental gain. If it's positive, if this number is positive, means incremental gain. Successful. That's what I said before. Because your acquisition value is supposed to be higher than the individual value of these two companies. Right?
So if after acquisition the category is negative, then so will they reverse?
Sorry?
Separate the,
If what?
if after acquisition the category and the result show that is negative, so they fail. So will they reverse the action?
Maybe not. They have to put more efforts and find the reason why like this. What is the reason? Probably they will not take very quick decision to separate, but yes, but they find out why. Because they have some, because before they getting into acquisition, they have some idea in their brain that why they are doing that. They believe that this thing will happen like this thing will be happen like that. If things doesn't go as they plan, and they come up with the idea that why. If it's not, of course, at the end they have to send it to someone else, pass on their bad luck to someone else. So this is the very basic thing about that. Now we can have a break.
Được như sao Win Sport luôn phải lộ hương mấy sao hương mấy mấy xịt đâu như vậy mà mấy xịt đâu lên đập máy nước kia lên đập máy nước kia ở đâu ngoài đấy nè còn lên rau nè hai chồng nữa là xong rồi giá trưởng mà giá trưởng đâu gì đấy đây giờ cái hai hai là đã em một đâu đúng rồi chơi coi sao chơi chơi sao
mày nó làm cái gì vậy ta?
nói này kiểu cái tài ô gì à ra sao râu râu dân ngu tập lù kinh minh tôi coi mà phải lựa vật vật này bên có bên gì đấy rồi kia đâu tay à đi body mid đâu Go. Go. Biết chơi không? Phạt xạ thế nếu mà lái xe đúng ai có ai nước mà ai cái lớp một cái năm
Léo mất thiệt á. Xong rồi tập đó, tập xong cái em làm quen. em không có nghe chị không từ khi bước đi đã không có nghe chị em
biết sao nó đặt, biết nó đặt bằng muối gì không? Muối gì đó.
nhưng mà em phải làm việc cái test trước em coi việc test ở xử lý đâu biết rồi bây giờ nó không được
Cái ông nội cái ông nội cái ông nội sao bước về phía tao tại vì nó không có
so với này là
có bị phờ không bị phờ nó tại không có kẹt không như cầu
nó bị anh còn bị một cái nó gần gần gì liên quan lá này liên quan chưa
Okay, so we start now.
môi trường giáo dục để ổn định để các bạn nhớ được không nào.
So now we talk about some more about synergy calculations. So make sure you keep this equation in your mind, that change in value equals to value of A plus B minus value of A and value of company B. Now let's talk more about synergy. So if firm A buy firm B, remember, in synergy, if firm A buys B, then under synergy, value of B means, instead of writing value of B, I write here VB. Value of B means VB. Then value of B plus incremental gain. Remember incremental gain? Gain of the synergy. Then there would be incremental gain in synergy. So what does it mean? We can explain this thing with the help of formula. So we can say that value of B, then here I'm using the word hysteric. It's kind of indication. So what does it mean? It means incremental gain. This represents incremental gain. Incremental gain. So this we can represent incremental gain with the help of this asterisk sign, right? Like a star sign. Right? And this is, remember, hold this full. This is not value of B. This is value of B plus incremental gain. All right. So what does it mean? It means value of B plus change in value. Because change in value means, what is the meaning of change in value? Change in value means incremental gain. So change in value and value of B means this. This means this. All right. So it's another way to understand the meaning of synergy. All right. One is simple way. Change in value means value of A and B minus A plus B. Right. Or value of B plus incremental gain is synergy. All right. Value of, we are not looking at the value of A because A is acquiring B. So what is the change in N? Because A still exists there because A is acquiring B. So A exists there. Then if they are, A is acquiring B, they are looking some benefits. That benefit called incremental gain. So B plus incremental gain is called successful synergy, right? Or successful acquisition. Right? So this asterisk means, so this whole situation is the change. If you want to know incremental gain, how can we find out incremental gain? Incremental gain means incremental cash flow. Incremental cash flow. All right. And this incremental cash flow, this incremental cash flows minus A cash flow and B cash flow individually. All right, A cash flow and B cash flow individually. We will see, and then whether how much is the actual things has been happened, contribution of this. It's just a way to explain it. We will not really go with this kind of criteria, but I'm just trying to say that this is another way to understand the meaning of this kind of synergy. But we will not come up with this kind of situation later. Just another way to find out if we are using cash flow to find out incremental gain. So means we should remove the gain of individual A and individual B. All right. We will remove the gain of individual A and B. Then we come up with our actual synergy. So we can understand in another way, which is way much more simple way. So we can say that change in cash flow. Change in cash flow means this. Incremental. Incremental is change. Change in cash flow equals to change in revenue minus change in cost minus change in tax minus change in any kinds of capital requirements. Capital requirement means they have to keep at least those amount of capital in their business. This is one of the way to identify the change in incremental.
So, a cash flow is it's like this valuation based on free cash flow.
Sorry?
A cash flow is the valuation of a in free cash flow method.
I think it could be a simple present value of it could be a free cash flows. Yes, this could be free cash flows methods to calculate the cash flow for A, or we can calculate simple NPV that we will discuss in next. But this is a very general concept to find out how can we find out the change in incremental cash flow, right? Now, you know, what does it mean? It means this. Your incremental cash flow probably will be equals to change in individual, I mean, removing A and B means change. So your cash flow has been changed when A to B acquisition. It means change in revenue from A to B after acquisition, cost after acquisition, change in the cost, and change in the tax payments, because revenue minus cost is profit. The profit you have to pay tax, but not always profit. Because one company has a profit, other company has a loss, overall company profit has been reduced, tax will be reduced. So sometimes you have a tax benefit that we will discuss later. And minus capital requirement, change in capital requirement. Capital requirement means the minimum amount of capital you like to hold in your business for emergency purposes. We call them capital reserve. Means company do not always sell all shares in a market. Sometimes company keeps some shares, and those shares will be appear in company balance sheet because of capital reserve. So company likes to keep capital reserves. Those capital reserves may be changed. Means company A keeping different capital reserves, company B keeping different capital reserves. When they merge together, maybe capital reserves will be different. All right, and capital reserves have a direct impact on your cash.
If their revenues will be equal for revenue of A minus to revenue of B.
Maybe revenue of A minus revenue of B, because I don't think so. It will be should be minus A minus B. No, because when you acquire another company, then your revenue, because revenue change means before acquisition and after acquisition. Revenue change doesn't mean that A to B change. We are not simply A minus B. We're not doing A minus B. We A plus B to make changes in a business. So that's the meaning of synergy. Synergy, we are not subtracting the income of one company with income of other company. We combining them to increase the income. So you will compare what was before acquisition and what actually happened after acquisition.
So it's hard to calculate.
Again, A and B individually minus A and B together. Remember, I think you didn't get the idea of this. This.
Yes.
That's the meaning of change. A and B together, how much they earn, and A how much earn, and B how much earn plus. And then we subtract. But you are saying that A minus B is change. No. It's not A minus B change. A plus B minus A and B. Right? So if you want, I can write number here for you to get idea.
How to calculate value of A.
After the acquisition, whatever business grow itself, based on its growth, we come up with the idea. But again, it's all about prediction. It's all about expectation. That what we have learned in the management accounting, how you come up with the forecasting, company profitability, revenue, and so on, budgeting, and so on. That's completely different chapter.
So,
but we are not talking about how to calculate this.
Will have in the
Is a separate chapter. Here we are discussing about if after acquisition you already have something and individually you have something, do we have any incremental gain or not? That's what we are trying to learn here. Right? But I agree with you. It's obvious question that how can we get this number? It's a different story. But everything would be given. You don't have to really go with this. Right? So, for example, here is $10, here is $8, and here is $20. That's what it means. So 18 minus 20, so $2 is incremental gain. So this $2, that's the meaning of change. So the difference. So now we go a little bit further to to talk about something else. Now you already got the idea about this. Now, when we calculate synergy, we should not avoid few things. First of all, do not ignore the market value. Market value of individual A, individual B. Do not ignore that market value, right? Because at the end, you're gonna have a look at overall market value, probably has been changed or not changed. So few things I will write down here. When you calculate this, do not ignore. Do not ignore these things. First of all, market value. Do not ignore market value. Next thing, you have to estimate only incremental cash flows. We are estimating only incremental cash flow, right? Second, another thing could be, do not ignore transaction cost. When we going to have some kinds of transaction cost during this synergy acquisition things, do not ignore it, because those transaction costs lead to your cost, and that cost probably could be subtracted from your change in cash flow, because change in revenue minus change in cost, so that should be part of your cost. So we cannot ignore that. Another point could be use correct discount rates. So that's, don't worry about that, but that would be given, but be careful about the discount rate, that rate of return, whatever would be given in your question. It depends upon the question, but these things just we have to keep in our mind, right? So for example, estimate only change in cash flow. Do not ignore market value. Market value, very important factors, right? This thing we have to keep in our mind. Correct discount rate. Yes, do not ignore any kind of discount, but it's given in your slide as well, but it's not really important at this moment. So now I'll show you some, yeah, I explain a little bit more, then we jump to the calculation. Now, you already understand two different equations. You already understand two equations. One is this, and another one is this. But this equation is equals to this equation, because at the end, we are estimating the change in the value of business. You know that, right? So let me write down, this is equation 2. This is 2, and this is 1. This is equation 1, and this is equation 2, right? Now, if we want to making acquisition, we always use NPV to estimate the value. And remember, what is NPV? NPV equals to present value the value right now, all right, minus cost of acquisition. Cost of acquisition. I think is the same thing that we learned in our financial management as well. So NPV could be positive, NPV could be negative, and NPV could be zero. I hope you remember that. Is that NPV positive? It's a good sign of your value. If NPV is zero, still it's acceptable. We will not reject or we will not regret with that decision. It's okay. It's okay. But this one is not okay. Right? Positive, okay. Equal also okay. But remember, we study NPV, then we move on to IRR method. If NPV is equals to zero, then we move on to IRR, but you don't have to worry right now about IRR. But it's just an idea. If what does it mean positive? Positive means PV is greater than cost of acquisition. Means the money that you paid for acquisition and the value has been increased after acquisition. So value has been increased after acquisition minus cost of acquisition is your net profit, right? My business value increased after acquisition. My business value is $20. And I paid $18 to acquire that company. So $2 is my gain. That's the meaning of this. The meaning of present value is this. Right? So that's I'm going to explain you next. So you can say that NPV equals to value of B plus change in value of company. All right. This is your value right now. All right. This is your value right now. Minus cost of acquisition, the money that you pay to acquire the company, right? So that is your cost of acquisition, and that would be your NPV, right? Or you have another way to write is NPV equals to value of B asterisk minus cost of acquisition, because this equal this. So either you say this or you say this is the same thing. That's what we learn here. What we learn here, equation 2, equation 1 is the same. All right. So see, VB plus change in V equals to VB asterisk. So means this equal this. So this equal this. All right. So we can combine them all together. If you combine all together, it would be value of AB, means after the acquisition, equals to value of A plus value of B asterisk minus cost of acquisition. All right. A, change in the value after the acquisition and the cost of acquisition. And if you minus from, if you add it with A, so it will become value of A and B. So we normally estimate, if I say NPV, we target about NPV based on the firm B. We are doing here based on normally firm B here. If I say about NPV for B. Not NPV for A, NPV for B. So now let's look at the question. I think that question you also have in your slide number 14. I don't know. So it's like this slide, this one. There is no any number, but I don't know which one. Can you find that one information in your slide? If you don't want to use your slide, I can show you there. So here. So you have basic information here. We have two informations here, two forms here. You don't have in your slide? You have? But it's okay, you don't need to see. But I'm just asking, if you don't have, then you have to worry. But I think you have. Don't worry, you don't need to. So now let's look at the question. You have share price for A and B. Number of shares, 20, 10. 20 euros, 10 euros. Market value is 500 for A, B is 100. Both of these firms are 100% equity. You estimate that incremental value of acquisition means change in value is 100 euros. We have information about change in value, so you don't have to calculate. That's what I was trying to explain. The board of firm B has indicated that it will agree to sale of the price is 150. So this is the cost of acquisition, right? That would be your cost of acquisition, payable in cash or shares. So let me show you another thing. The question is, let me show you this answer. And then you can see that rather than just calculating. This answer you also have in your slides, so you don't have to worry. So what does it mean? It says that the question is, should firm A acquire firm B? Means, should it pay in cash or shares? All right. What does it mean, pay in cash and share? Cash and share means firm A is acquiring firm B. I give you cash and I will acquire you. You leave. This is cash option. Share option means I give you share and I will acquire you. Do you see any difference in these two acquisition things? Yes, not really control, but the problem with the share is in future, I have to share my profit with you. Even though I acquire you, But you are shareholder in my company because I gave you by shares. Remember acquisition by share, acquisition by assets. So probably first option is acquisition by assets or acquisition by cash, whatever. But second option is acquisition by share. So means I am giving you share and I'm taking control over you, right? In this situation, in future, I may have to share profit with you. So that may not be good, but I may have to share, I can share loss with you as well. So that's also good for me. So we have a two situations. I already gave you answer. In your opinion, which options do you prefer? Is better, cash or share? Cash, of course, cash. Because why cash? Because we assume in synergy, there is an incremental gain, profit, benefits, whatever. At the end, incremental gain belongs to the A and B. So they have to share with B as well, because since they are part of shareholders, whatever is incremental gain in your synergy, it will be distributed among shareholders, no matter shareholders where they come from. It would be shared with them. So in a case of share, is not a best option. I already gave you answer for this, but we also calculate. That's what they say. Should it pay in cash or share? It shouldn't be paid in share, it should be paid in cash. But now we will see quickly what's the difference if we pay in cash and we pay in share, and then we compare it with the help of numbers. All right. So to answer, we need to calculate NPV of acquisition under both alternatives. We can start by noting that value of from B to A is, you know that, value of B incremental plus change in value plus value B. We have this number. How much is this? We have to calculate. Sorry. So we have this change in value. Change in value is 100. And value of B 100. So 200 is this. Right? Okay. Now, I think let me directly show you profit. Not profit. This is given in your slides, right? It's not something that out of nowhere. So, how we calculate NPV? NPV, we know that change in value be incremental minus cost. Change in value, we already have 200 minus cost of acquisition. Cost of acquisition is, remember I explained you last time, cost of acquisition is they agree to pay, sale, means they agree to sell, means you will buy. So they sell means you buy. So that would be your cost of acquisition. So NPV is 50. All right. So we already calculated NPV. Now, remember the third equation. We follow this. Remember the third equation, value of AB equals to value A, B, and blah, blah. So value of AB equals to value of A. All right. How much is value of AB? You'll find value of A. So value of A. Value of A is 500. Do not ignore the market value. Remember, things that we should not ignore. We should not ignore market value. We should not ignore incremental value. All right. So value of A is 500 plus V static B. We already estimated V static B is 200. 200 minus cost of acquisition is 150. So value of AB is 550. So price per share after merger is 550 divided by 25. So 25 is your number of shares because they do not exist because you already bought it all. So 500 divided by 25 is 22, right? So this is your case one for cash acquisition. Now we move on to our second option, which is a little bit go in detail, a little bit complicated, but let's try to figure it out. So let me show you the answer for that. Okay. So now in equity option, value of AB equals to value of A, value of B, and change in value. Value of AB would be value of A 500, value of B 100, change in value 100, total value of A and B is 700. We keep this value in our mind. Now next formula is NPV is equals to, you can perform this one first or this one last, it doesn't really matter. Anytime you can perform. So NPV equals to V static B minus cost. V static B, which is given 200 minus cost. Cost of acquisition by paying a share. All right. Here was very simple because they were paid in cash. So that's why we use cash. But here, it's pay by share. It's pay by share. So we have to calculate because they don't say anything about share information. So we need to find out this number. So it means pay by share is 161 and pay by cost, pay by cash is 150. So I will show you this number, how we get this number, but just try to compare here. Try to compare. If you pay by cash, your cost is high. Sorry, cost is low. 161, pay by share, and pay by cash is 150. How much is NPV? And here, how much is NPV? Remember what we have learned before? Higher NPV, most likely to select the project in financial management. Remember that? Remember, this is NPV is positive. We select this option. This NPV also positive. We also select the option, but which option is better? Of course, this option is better because NPV value is higher. All right. So that was the initial question. Should we go with the cash option or share option? So this is the one of the way to explaining that cash option would be better here because since the NPV value is higher than that. But from theoretical point of view, this is based on number, we make a decision. But from theory point of view, you can also give comment that I said before, in case of share, company most likely have a future obligations to pay them dividend over the period of time. because the acquiring company is B company. Still, they are connected with company as they are holding a share, because exchange of acquisition is a form of share, right? Because the type of acquisition is a acquisition through shares. So that's probably may not be really good options for company, but again, there is also advantage of doing this is tax benefits. If in case of value of firm B has a loss, you can have a tax benefits, tax advantage, because the overall profit would be decreased. So now let me show you number, how we get this 161 number. Okay. Now, so cost of acquisition, remember, this is the cost of acquisition. Remember that, right? So cost of acquisition is 150 euros, means cash. All right. So, but firm A will have to give up this 150 cash option. They will not choose this 150 cash option. They have to give up, right? So, firm A give up this cash option. They will not choose this cash option. So it means 150 divided by, let me check what is the share value of that. It's wait, let me check. Yeah, share price is, the value of share is 20. They have to give shares, so the value of one share, share price is 20. So 150 divided by 20. So it would be 7.5. So 7.5, you can say that, what is 7.5? What is 7.5? So means 150 is a worth of share. 150 is a worth of, we are choosing, it's a share. Remember what I said? What I said here, worth of share. So it's a worth of shares. So it means 7.5 shares. That's what does it mean? All right. So give up means they will not choose this option. They are not choosing the cost option. They have to replace, not choosing cash option. They have to replace cash with share. So they're giving up this cash option. So they're not using it. So now, after merger, if we merge, what would be the total number of shares after merger? Yes, we always look at option one. How much they have right now? They have right now 25. So after merger, it would be 7.5 plus 25 shares. these 25 shares are for A. All right, and 25 shares for A. So total we have 25 number of shares and they have 7 more shares. So after merger, the total number of share would be 32. Right. So what will be the value of per share? Remember, this is after merger. How many total shares we have now? 32.5 shares after merger. Number of shares after merger. And what is the value after merger? How much is the value after merger? Total value after merger. 700 euros. Right? We have total value and we have total shares. So, can we calculate share or per share value after merger? How much it would be? So, after merger value per share, it would be 700 divided by 32.5 shares. So how much is this? 21.5. 21.5 per share. Remember that. Per share. Per share. So, and 21.5 is the per share, and how much you are giving? 7.5. That's right. You are giving 7.5 shares. And the value of one share is 21.5. So how much total money that you are paying? 161.5. Giving, or you can say that giving 7.5 shares. All right. So that would be the cost. Cost of acquisition. All right, so this is the way to estimate. This calculation is not given in your slide, so make sure you note down. All right, or if you understand, we have recording, but in case I will send you slide later as well, just for your homework thing. All right, so I'll just give you a quick idea of what's going on here. Let's always start from the cost of acquisition. Cost of acquisition is 150 euros. Cost to acquire the company. But since we are not paying cash, we are paying 150 worth of shares. The total, we don't know how many shares and what is the value of share, that's what we have to calculate. So 150 worth of share we are paying to B. So means, and if 150 worth of share we are paying, and value of one share of company A is 20, so means we are paying 7.5, we giving 7.5 shares, right? If after merger, so means right now we are paying, giving 7.5 merger shares, and the current number of shares A company has 25. So after merger, this plus any change. 32.5 will be total number of shares. So this is the number of shares after merger. And now value of shares after merger, we already calculated 700. You know that, it's very simple. So we got this number 700. Now after merger, the value per share is this divided by this. Total value divided by total number of share is the price per share, which is 21.5. We have price per share and we know how much we are paying. We are paying for acquisition, this, and the price of acquisition is this. So total cost of acquisition is this. Right? 161.5. So my NPV is 38.5. So the conclusion is cash option 50 NPV. All right, and share option 38.5. 38.5. So for this reason, we select higher NPV, we reject this option. All right, so that's very clear cut answer about it. Any question, anybody for that? Yes or no? No question? So I just quickly move on to the last concept and one more thing. So divestiture means when company sell a piece of itself to another company rather than selling a. It's another terms that probably kind of things probably would happen in case of merger and acquisition. So in this situation, company sell a piece of itself to another company rather than giving a large proportion, large control, small, of course, less than 50% portions they are giving to us. Equity carve out is a company creates a new company out of subsidiary and then sell a minority interest to public through an IPOs. Is another way to do. It means you have a equity, you cut small equity. So this is your equity. You cut small part and you sell as an IPO to raise money. So that's called the equity carve out. Another strategy, another technique to create, but again, it's not a really big part. So probably, I don't know, 5%, 10% of the company's equity they're selling out of outsiders. Spin off a company, create a new company out of subsidiary and distribute the share of new company to parent company stockholder. That's really interesting. Means they are it's very funny. This is a parent company, right? They take one part of parent company and got money, probably sell, and this is subsidiary. Subsidiary take small parts of company to create a new company. When they create new company, they will ask them to be a shareholder of this company. So it's another strategy to diversify itself. It's a strategy to diversify itself to now it means, for example, I ask my parents to give me money. I wanna make one Flappy Birds, some kind of things. You know Flappy Birds? Yeah. I made some kind of Flappy Birds things, and now I ask my parents to buy that. You know what does it mean? It's like that kind of things. But companies will be different because company perform things individually rather than separately. But that's because parent company is the full company. Right? So based on money of parent company, I create new company. Once I have a company, new company, I sell those shares to parent company. That means I take money from them, I make create company, have shares, and sell them shares to them indirectly and link it with them. But companies a little bit different than family things. The example I gave you because families are private things, but company they work separately. They are not about professionalism. Split up is company is split into two or more companies and share. All companies are distributed to original firm shareholder. It's kind of similar things, but it's more strategically spinning rather than splitting. Yeah, here you are doing just you creating a one companies and that company will sell, but in splitting you split into multiple. Like for example, here this is called spin. Split means here, here, here. So this company not only creating one, but they creating multiple. This is called splitting. Rather than putting into money into one new company, they're distributing through other various companies. So that's the idea behind it, right? So that's all about this topic, except for this. Better I leave this defensive techniques or sorry, tactics on you. So because of remember in the beginning I explained you about the proxy context or proxy fight. We can avoid proxy fight by doing all these things. All right. So I leave it on you to read this one. The explanation of these defective techniques are given in your slides notes. All right. If you see that, if you don't find it, you let me know. I will send you update you. But I think it has. So you read all this. It's written in very simple language. You read and you understand because I don't want to skip this part in case if you have this question in your exams, then probably you will not able to understand what does it mean. So please have a look and read it by yourself. And if anything you do not understand, let me know. Right? So that's all about this. Plus, you have only one question for this topic. Only one question. So I hope you would be able to finish that question before Saturday class. And if you do not understand, you let me know. I think I haven't sent you solution for that question. I will send you solution tomorrow with this topic. And please quickly try to have a look. That question is not that much complicated. It's a very general idea. You do that. If you do not understand, you let me know. I will explain you on this Saturday. Right? But this topic is finished. So we stop here. I will see you on Saturday. Okay. Only one. I don't want to teach you two topics. Morning, we will study working capital. Afternoon, we will also continue with working capital because I want to add more questions, practice. So 2 sessions means we will do practice, not only 3. So see you on Saturday, 8:30. Yeah, bye. What is